New business formations are up 54% from pre-pandemic levels, but 93% of those new businesses are sole proprietors, and that's a very different risk profile to the borrowers that lenders built their models around. Welcome to the Commercial Pulse Update for May 26th, 2026. The Experian Commercial Pulse is a bi-weekly report offering a snapshot of the US economy and its impact on small businesses. If you end up liking this video, remember to hit subscribe to continue seeing Experian updates like this in your feed. April unemployment held steady at 4.3%, marking the 10th consecutive month. Unemployment has remained within the narrow 4.3 to 4.5% range. Wage growth also continued, with average hourly earnings rising to $32.23 an hour. Inflation accelerated to 3.8% in April, the highest level since May 2023. Core inflation also moved higher to 2.8%, while producer price inflation climbed sharply to 6%. Rising oil and energy prices remain a major contributor to inflationary pressure. Small business optimism hedged slightly higher in April to 95.9, improving from March's 95.8 reading. While optimism remains below historical averages, the modest increase suggests some stabilization in business sentiment. Consumer sentiment fell to 48.2 in early May, down from 49.8 in April, and now sitting at a record low. Consumers continue to face pressure from inflation, elevated borrowing costs, and uncertainty surrounding energy prices and global economic conditions. Crude oil prices recently surged above $100 per barrel for the first time since March of 2022, amid the ongoing conflict in the Middle East. Fuel prices have risen significantly as a result, with regular gasoline up 43% year over year and diesel up 59%. These cost pressures aren't just affecting consumers, they're also reshaping who's entering the labor market and how. Since the pandemic, the US has averaged approximately 450,000 new business formations each month. That represents a 54% increase compared to the pre-pandemic levels from 2018 and 2019. Roughly 93% of newly formed businesses in early 2026 were sole proprietors, compared to 85% in 2018. These aren't businesses with payroll or established credit histories. They're individuals, and underwriting them requires a fundamentally different lens. The US population continues to age rapidly. By 2050, individuals aged 55 and older are projected to represent nearly 40% of the population. Individuals are working later in life. Historically, people 55 years or older had the lowest workforce participation rate, but since 2008, the over 55s surpassed the participation rate of 16 to 19-year-olds, which has been on a decline since the 1970s. And look at this, 7% unretirement rate. It illustrates that more retirees are remaining economically active through consulting work, running side businesses, setting up freelance arrangements, and doing part-time jobs. While workforce participation has been declining, the participation fell to 61.8% in April, the lowest level since October of 2021. Job openings have also softened, and unemployed individuals recently outnumbered available job vacancies for the first time since mid-2021. Another contributing factor is declining employee engagement. According to Gallup, employee engagement in the US and Canada declined to 31% in 2025, down from the post-pandemic high of 33%. Gallup estimates low engagement cost the global economy nearly $10 trillion in lost productivity. Younger workers appear especially affected by workplace stress, dissatisfaction, and changing expectations around flexibility and career growth. These trends may be contributing to more individuals pursuing entrepreneurship, independent work, and alternative income streams. These workforce and demographic shifts are having a measurable impact on commercial credit markets. Experian data shows that smaller businesses rely more heavily on commercial credit cards, while larger firms utilize a broader mix of leases, term loans, and commercial credit lines. Businesses with 4 or less employees received average commercial credit card lines of roughly $8,900 in 2025. By comparison, businesses with more than 100 employees averaged approximately $29,000 in new commercial credit card lines. Although term loan origination rates are relatively similar across business sizes, average loan amounts vary considerably. Businesses with fewer than 4 employees averaged approximately $119K in new term loan originations, while businesses with more than 100 employees averaged closer to $268,000. From a risk perspective, larger businesses generally continue to demonstrate lower delinquency rates and stronger commercial credit scores. As these newer, smaller firms continue to enter the market, lenders should remain agile in balancing growth opportunities with underwriting and risk management strategies. Experian is here to provide insights and analysis designed to help businesses, lenders, and decision makers create better outcomes. And there's a lot more on the changing demographics of the US workforce in this week's report, so be sure to subscribe. If you're a lender trying to navigate this new landscape of smaller, younger borrowers, Experian's commercial data can help you build models that reflect this new reality. Reach out to your account team to learn more. If you found this update valuable, be sure to like and share this video and subscribe to our YouTube channel for more videos like this one. And last, remember to keep informed to stay ahead, and we'll catch you on the next one.